All right, so the itinerary for tonight's webinar is we will review the concepts from some recent webinars, provide an overview of how everything fits together, and then I'll answer some questions about the live training, which starts on Saturday. And if we have some time at the end, we'll maybe look at a few stocks as well. All right, so sit tight, and this will probably be a little shorter than the other ones, maybe 45 minutes or so, and hopefully give you a good overview of the Stockscores approach and how everything works together. So within the Stockscores approach, we have a number of different components. We have the foundation of knowledge, that's the theory, the backbone of what I do as a trader, and I'll talk about that a little bit this evening. We then have the strategy component, the actual rules for when to buy, how to manage risk, when to sell, and how to manage emotion through the process. Even with the very best rules, if you don't have a good process, then you can't put those rules and strategies into play. So I'll show you a little bit of the process that I do, both for longer term position trading and also shorter term swing and day trading. And then there's the practice component. You know, you can read a book on how to ride a bike, but unless you actually do it, you don't really learn your balance. You don't learn how to ride a bike effectively. So all of those things really make up the Stockscores approach, and we'll go through them one at a time. Our ultimate goal, the reason we put all this effort into these things, is that we want to find stocks that outperform the general market. If the market goes up 10%, we want to find the stock that goes up 15, 20%. If we trade the market on an intraday basis, we want to find those stocks that are hot that really make big moves. I'll show you in a moment a stock that was up over 100% today, very liquid and really pretty easy to take advantage of if you had the process to find it and the rules for when to buy, when to sell, and how to manage risk. And that's really what I teach people so that you can take advantage of these stocks. And this week there's actually been more than I would have expected, probably more than we've seen in quite a long time. There's been some real hot big movers. KBIO, huge mover. It went from $1 2 weeks ago to, I think it hit $45 yesterday. So those stocks are out there. You just need some tools and a process to find them. We don't want to just get caught up in, you know, how much does the stock go up or down. We also want to think about how much reward do we get for the risk we had to take. And we talked about this in a webinar in the last week or two, where we want to make sure that, you know, if we risk $1,000, we don't want to make 300. We want to make something more than 1,000. We want to make 2, 3, 4,000, so that our reward potential outweighs the risk. And the reason is because the stock market cannot be predicted. We are never going to be right all of the time when investing or trading the stock market. So we need a methodology that allows us to make more money when we're right than what we lose when we are wrong, and to have a method for knowing when we are wrong and to take the small loss and move on. I think it's also important to keep it simple. Our lives these days are busier than ever. We are inundated with so much information, and it can become overwhelming to try to manage your money. It doesn't need to be that way. You can have a simple approach to whether it's manage your portfolio or make a living trading the stock market. It doesn't have to be complicated. If we can keep it simple, then it becomes fun. I get a great kick out of making money with a mouse and a computer, buying and selling stocks. You can do it anywhere in the world. You can do it virtually any time. I personally just trade North American hours, but it's possible to trade almost 24 hours a day if you desire. And it's a lot of fun to do that. You know, I've done it for 26 years now, and I still get up every morning. Where I am, I get up pretty early because I enjoy doing it. And I think that's one of the great things about trading. It gives you a lot of freedom and it's fun. All right, so let's look at some examples of what we're trying to do. When I speak about goals, I talk about stocks that are beating the market, that are outperforming. This is an example of what we would have spoken about on Thursday last week, where we focused on investing in the stock market using the Stockscores approach. This is a stock that meets the criteria of one of my position trading strategies, one that's called the Stockscores Simple strategy. And the basics of that strategy is we need the green line, which is the sentiment stock score, point number 1, to be above 60. The blue line, point number 2, to be above 80. And then point number 3, we need a predictive chart pattern. And I teach my students about a dozen different chart patterns. This particular one was called a pennant pattern. And we had a breakout from a pennant with the stock scores in the right place. And you can see that since that entry signal at the green arrow, the stock has moved up from about 8.25, 8.25 to 11.50 in 3.5, 4 months. And it's also in risk reward terms, which we talked about, I think in the first webinar I did 2 Thursdays ago. In risk reward terms, this stock is now up 3.5, almost 4 times to 1, which means if you risked $1,000, you are sitting at about a $3,500 profit on this trade. If it didn't work, and they often don't work, then you would have lost $1,000. So here's an example where you risked $1,000, and if you sold tomorrow, you've made $3,500. That's a good reward for risk trade-off, and that's one of the key things that I teach in the courses that I do. Now moving along to swing trading. So for the person who has maybe 1 or 2 hours a day to monitor the market, I recommend swing trading. Swing trading is buying a stock and holding for something less than 2 weeks. Not just buying, you can short sell as well. With swing trading, I mostly buy. But here's an example of a stock that met the requirements of my Stockscores Simple Swing strategy. We apply this strategy mostly in the first hour. Most of the entry signals come in the first hour of the trading day, so it's great for someone that can't watch the market the whole day, but if they can spend that opening hour, they can find probably 80% of the valid entry signals in the market. And we look for pink dots. You can see that there are 3 pink dots on this chart. The pink dots represent an indicator that I wrote for a program called TradeStation. TradeStation is an American brokerage. Canadians, I know many Canadians on the webinar tonight, we can't open an account with TradeStation because American brokerages are not allowed to open accounts for Canadians, but we can subscribe to the platform. So I subscribe to the platform. It allows me to use my indicators to find stocks before the crowd does, and that's really the key. The reason, buying at that green arrow was good is because the crowd hadn't figured out that the stock was good yet. It was just a small number of people that know this company very well that jumped on it and created the activity that my little algorithm looks for. And so the reason that there is a pink dot on that candle that basically opened at 10 o'clock and closed at 10:30 Eastern time, there's a pink dot on that candle because it was making a statistically significant price gain with a statistically significant volume. And I, as I said, wrote an indicator for TradeStation to look for that. And I can get the computer, and I'll show you the process in a minute, but I can get the computer to watch every stock in North America, or actually not North America, just the US markets, because TradeStation only works for the US market. But I can get it to watch every stock in the US for pink dots. And when I see a pink dot, I analyze the chart pattern. Most pink dots don't qualify. You can see that there are 3 of them on this chart, and it's only the one at the green arrow that actually qualified. But when I see that, then I can take the trade. And again, it's about managing risk. So in this case, buying the stock at 7.89 with a stop loss at 7.39, our risk was 50 cents a share. Well, as of the close today, the stock is at $9.86. So it's gone up roughly $2. In a situation where you had to risk 50 cents, that's a good reward for risk trade-off. And then for those who want to make a career out of trading the market, who want to monitor the market all day, maybe not every day. I have many students who will trade 2 days a week, but when they're trading, they're doing it for most of the day. And this is a stock as a day trade, met my criteria at the green arrow. I have a strategy called an intraday pullback play, and all of the rules were met at the green arrow. Entry price at 563, stop at 523, close the day at 860. That's a great reward for risk trade-off. Each one of the lines that you see on that chart represent a multiple of risk. So the blue line right here is a 1-to-1 reward for risk ratio. At the gold line, it's 2-for-1. And then we're at 3-for-1 at the gray line. And then the kind of mustard yellow line, we're at 4-to-1, 5-to-1, 6-to-1, 7-to-1, 8-to-1, 9-to-1. With this particular strategy, we just hold these until the close. It's actually the most effective strategy exit-wise for this particular Stockscores strategy. And by the close, that stock was up a little better than 9.5 times risk. So you risk $500, you make $4,750. You risk $100, you make $950. You get the idea. It's all about reward for risk. We don't like to take big losses. We obviously like big gains, and they come along, 1 to 2 times out of 10, and we just manage the process so that after we've done 10 trades, we've got a couple big winners, a few small losers, a few small winners, and the small winners and losers balance each other out, and the big winners are where we make our money. So in order to get to that point, we have to build a foundation of knowledge. Now, I have created about a dozen modules, which I'll show you in just a moment, that give you the foundation for analyzing the market with my approach. They're the core skills for analyzing markets, exchange-traded funds, individual stocks. You can even apply these skills to trading currencies, trading commodities. They're simple concepts that are pretty ubiquitous when it comes to analyzing anything that trades, anything that you can get a chart for. One of my aims was to keep it simple, to avoid financial lingo and focus on these simple concepts that anyone, regardless of their background, can get. It's not that intellectually difficult to go through my material. It just takes some time, some practice, and I've organized it in such a way that we take big concepts and break them down into small component pieces and explain each piece and then how those pieces relate to one another to build the concept. The foundation really gives you an efficient method that allows you to separate the standout stocks from the broad world of stocks. I have a saying, most stocks, most of the time, are not worth trading. In the market today, using one of my strategies, there was maybe 10 stocks that were worth watching. That is out of, thousands and thousands of stocks. And so I'll show you the process in a moment in terms of, in this case, what I speak about is day trading. There's only 10 stocks to watch for one particular strategy because most stocks, most of the time, are not worth trading. I have another strategy where I only watch maybe 40 or 50 stocks. I have a tool that allows you to search through 15,000 stocks to find the standouts that are moving faster than the market, that have the potential to beat the market. We call those alpha stocks. They're the stocks trading on their own story and really giving you the potential to beat the market. Now, I am a strategy trader. We talked about that earlier in the week. I'm all about rules for investing or for trading the market. I have rules for when to buy. I have rules for how I size my position and manage risk. I have rules for when to sell. Sometimes I short sell stocks, and then of course I have rules for when to cover the short position. The reason I trade with strategies rather than trying to be smart, rather than trying to uncover great information or do really in-depth analysis of companies, the reason I simply trade on rules and algorithms and math basically is because I'm trying to overcome being human. I'm trying to overcome the information bias that exists in the market. When I say overcome being human, the reason I say that is because human beings are pre-programmed to fail in the stock market. Humans are taught to avoid pain and pursue pleasure. That happens from the moment we are born. Our parents yell at us when we get close to a hot stove. They grab our hand when we are walking through a busy parking lot. And ultimately, it's all about avoiding pain. Well, in the stock market, that hurts you because that means you will shy away from taking risk and you tend to avoid holding good positions for fear that a winner will turn into a loser. And so by adapting or developing a mechanical strategy, rule, we get well on our way to overcome being human. Now, the other thing there that I say we need to overcome is the information bias. The financial industry is in business to take your money. Mutual funds, advisors, so much of what goes on in the financial industry is all about fee for non-performance. Okay, when you go to a mutual fund company or an investment advisor, they don't get paid based on how much money you make. Some hedge funds do. They have structures where they get paid for performance, but for the most part, the financial industry doesn't get paid for performance. It doesn't mean there's bad people that work as investment advisors or bad people that manage money. There's some great people doing it, but realize that there is a bias against you because they get paid no matter what. And you only get paid when the stock goes up that you own or a stock goes down that you short. The result is that the information that comes from companies to you is often biased. They want you to buy stocks. They don't get paid or rewarded unless you're buying their stock. And that means the media, the websites that are out there, so much sources of information come with a bias. And I think if you ultimately cast aside all of those biased information sources and just listen to what the market is telling you, well, then you can do well. So when I talk about strategy trading, I break it down into position trading, which is holding stocks for weeks or months, swing trading, which is holding stocks for days to weeks, and day trading, which is holding stocks for less than a day. And in a moment, I'll show you the process that I use for each. So it's not enough to have rules. We could say, I'm going to buy a stock when its sentiment stock score is above 60, its signal stock score is above 80, and it has a predictive chart pattern. That's great, but unless we have a mechanical, step-by-step approach, a process to identify and evaluate opportunities, we're going to miss opportunities, we're going to catch them too late, we're going to lack discipline. We want a process that helps us strengthen our focus, that we can use to improve our results. You know, one of my great challenges when I day trade every day is not whether my rules work well, because I know that if I do them over and over again, they work very well. My problem is not missing things. I'm constantly trying to refine my process so that I can get good at catching everything at the right time. Now, when you're position trading, that's not that hard because position trading is not so time sensitive. Swing trading, more difficult than position trading, but still not that difficult. Where process really matters is when you are trying to make a career out of trading by day trading the market. That's where you need great process. But even if you're position trading, you still need great process. We want processes that will save us time, that allow us to use our capital effectively. One of the key things that I want to remind people is that putting money into a dead stock, a stock that's not doing anything for you, even if it's not losing you money, is actually losing you something, because that money that you have parked in that stock that's going nowhere could be somewhere else making you money. You know, how many stocks do you have in your portfolio today that are parking lots, that aren't earning you anything? And what if you had a method where you could take that capital and always have it working for you? Always having in stocks that are moving, and when those stocks stop performing, have a process and a set of rules to say, hey, I'm done, I'm out of this one, and I'm moving on to the next one. So let's quickly review the process that we went through this week for the different trading styles. We'll begin with a position trading style. So let me first say we go into the education area, and within education we have strategies in the investor section. So I've got the exit strategy, and then I've got 4 buying strategies. And I'm working on a new buying strategy, which I will upload here as soon as I've satisfied with its performance. But for now, we could do something like the Stockscores Simple Daily Strategy. If I click on that or click on the little video icon, I can watch a video that explains this to me. I'm not going to spend too much time in here because I've shown this in numerous other webinars, so it's just a review. But this is where you have your strategies. All right, well, once I know those strategies and I've learned them, I can go to the market scan tool. I can select the strategy. So I could do the stock score simple, we'll do the US one, and I can run the report, and it searches through every stock that trades in the US, and in just a moment, it gives me, in this case, 103 stocks that meet the criteria of that strategy. Now, if I found that the results list was too big, I could refine my scan. I could say, well, only show me the stocks that are between, let's say, $1 and $15. Or I could say only the stocks on the NASDAQ exchange or something like that. So now I've got a shorter list. I can say select all and review those charts in a gallery. And now I'm looking for predictive chart patterns. So this first one, XCO, is a pretty good pattern. It's not a great pattern. It's something called a flag, but it has recently broken its downward trend. So I would rate it a 6 out of 10. I think this stock is more likely to go higher than lower. I can't say I love it because the particular pattern on this one is not great, but not a bad looking stock. Here's another one that looks pretty good. If this stock can break up through $1.60 with some volume, it would satisfy my bottom fishing strategy. Moving along, I can just cycle through charts looking for the predictive chart patterns. What this process has done so far is put good candidates in front of me. Now I need to apply what I've learned in the strategy lesson in terms of what are predictive chart patterns to know what to look for. And so as I cycle through them, because I practiced this a lot, I know very quickly which ones to stop and take a look at. So here's another one that's okay. It's not great. It's okay. This is AINV. More likely to go higher than lower. I'd rate this one a 6 out of 10 as well. It's missing a few things that I'd like to see. But one thing I want to highlight is notice that when this stock was really moving down from the start of June until the start of November, that our sentiment stock score was low, was below 60 that whole time. So while the stock was performing poorly, our strategy rules, which was sentiment stock score needs to be above 60, was not in the right place, right? And it's just now that it's now going above 60. It looks like it did that a few days ago. And I will tell you that the chart pattern is getting better. These stock scores indicators were created by me to take elements of good chart patterns and put a score to them. So when we have scores that are above 60 and above 80, it's likely that we have a predictive chart pattern. We still have to evaluate the chart itself. We still have to apply some rules and some method to evaluating those charts, but that's what the stock scores are all about. They're helping us find predictive chart patterns. Here's another one you should keep an eye on, WPX. If it can break up through $9, I like it. Probably has potential to move up to 14. And again, notice that the stock scores were pretty negative since the summer, and they're just starting to come up again. And if you remember what we talked about on 2 Thursdays ago, this now got rising bottoms, it's got low volatility, and we just need a breakthrough resistance at $9 to make it a decent stock. Okay, here's another one that gave a pretty good entry signal about 3 weeks ago right here. Hasn't done anything for 3 weeks until today when it started to follow through. Up 14% today, but it all started about 2.5, 3 weeks ago when it broke from an ascending triangle pattern after recently breaking the downward trend line. Those are all things that are taught in the foundation modules and then of course in the strategy section. All right, so that's the process for using stock scores to position trade. We can use stock scores for swing trading as well. I won't show that tonight. What I want to focus on instead is with TradeStation. So I'm going to jump over to TradeStation. We're going to go into this tab here, which is called the 30 Action tab. And this is where I apply my strategy called my simple swing. I can do the simple swing on a 30-minute interval or on a 13-minute interval. And 13 is probably better, but I've set it up tonight for 30, so we'll just walk through that way. What I did before I started the webinar is I loaded all of the gainers for today into this screen. And I did it beforehand because it takes a minute or so for it to update, and I didn't want to waste your time as we waited for that to happen. So what I'm going to do now is just highlight the first one here. And we can see that this stock had a pink dot on the opening candle of the day. So just to explain this chart represents the last 20 or 30 trading days. Each bar, each candle, is 30 minutes of trading. So you can see that on the open today, this stock started to really move up quickly and did so with very strong volume. So that's one of the things that we look for, and that's why there's a pink dot on that candle. Now notice that that happened at about just under 8 cents, so this is a real penny stock. By the end of the day, it was at 12 cents. It had moved up 50% just from that opening pink dot candle. So what the process is at the start of the day, about 25 minutes after the open, we run this process looking for action candles. Now we can actually do this on Stockscores as well. We just have to do it about 10 minutes later. So you're a little bit later than the people using TradeStation, but it's not a big deal. And what you're trying to do is find stocks that have predictive chart patterns with the little pink dots on the chart. On Stockscores, you don't see the pink dot, but you will be able to see the strong movers from the open. Here's another one that had a strong move from the open, was pretty boring and quiet, and then opened strong, pink dot here at $3.20, went all the way up to over $3.60 in just the span of a couple of hours. As a trader, you can take advantage of those swings. So that's the process that we use for swing trading using TradeStation. The last process I want to show you is the day trading process for a strategy called an intraday pullback play. If I go back into Stockscores and go to the education area, and we'll close the investor strategies and open the active trader strategies, you can see that I have something here called the intraday pullback play strategy. There's a video and there's a document lesson that explain the rules of that. We're just going to go in here and I'll show you the steps. Step one is I run a scan called Gainers, which is something I have programmed into TradeStation. I give the settings for this scan to all of my students who take my active trader course. I drop the symbols into the first screen and I grab those that meet the first rule. So there's a certain rule that we follow for the first step, and then I paste the symbols in for the second step. Right now it's calculating the value of some indicators, so you'll see here it's just working on calculating for all of these symbols. It's finished that now. It only takes about 10 seconds. I'm going to sort this by this particular indicator, and anything that has a value of greater than 1.95 is a candidate for this strategy today. So there was 19 stocks on this particular strategy today that met the basic criteria of this strategy rule. Then we monitor those stocks for certain things. So I'm going to take these symbols and drop them into this screen here where it looks for another indicator that I've written. And you can see that there's some indicators calculating there. What I'm really looking for is a certain pattern. So I want stocks that are behaving abnormally, and I want a certain pattern. Now you'll notice that there's pink dots, yellow dots, blue dots. So with this particular strategy, we're looking for blue dots. So there's my first blue dot, and it's a qualifying entry about 3 or 4 candles later when we had a buy signal for this strategy. So we enter at that particular price. Our stop loss is at that lower line. So we're buying at 570. Our stop at, we put it at 520 actually. So our risk is 50 cents a share. That means if we buy 1,000 shares, our risk is $500. So let's say we buy 1,000 shares at $5.70. Our cost to acquire this position is $5,700. At the end of the day, the stock closed at $8.60. So let's say that we sold just before the close at $8.50. That would mean we had made a profit of $2.80 a share times 1,000 shares. So that's $2,800 profit for a trade that had a risk of $500. So our risk was a little better than 5 to 1. Now in this particular strategy, we actually don't use these lines for our exits. We exit the position at the close. On this, you can use the lines if you want, but I find it's more profitable just to hold until the close. It doesn't always work the best, but overall it does work the best. And so that is the intraday pullback strategy. Now, through the day, you're constantly having to go through the process I just showed you. Run the scan, drop it into this screen, grab the qualifiers, drop them into this screen, grab the qualifiers, drop them into this screen, and watch for these indicators to fire. When you get an indicator that fires, you take a look at the chart and you determine if there was an entry signal. So there was an entry signal on this one, BECN right here. There's the blue dot. We actually had to wait for 2 candles later. We already looked at Gibson. Let's try this Dollar Tree. Dollar Tree right here. So just a couple after this blue dot. So the blue dot sets an alert, and then we watch for the entry signal after the blue dot. And again, if you want to talk in terms of reward for risk, you would draw your lines like this. And this one finished up about 1, 2, almost 3 times reward for risk. All right, so that is the process that we use for day trading, swing trading, and position trading. Position trading, use Stockscores. Swing trading, use TradeStation or Stockscores. And day trading, use TradeStation. Now, I get asked all the time, do you have to use TradeStation? You don't. You can adapt my strategies to other platforms. However, for the cost of TradeStation, you will make more money than I think you will make if you use the other platforms. I think when you start trading and you want to keep your costs down when you're learning, great, use another platform because it doesn't matter that much. But as you get a little more serious and it's more of a business for you, then I think the cost of TradeStation, which is about $300 a month if you have to subscribe to it, is well worth it. Now, if you are living in the US and you can open an account with TradeStation, then you don't have to worry about that because TradeStation is free as long as you have an account with that as your broker. Now, the final thing I want to talk about here is practice. Trading is simple, but it is not easy. I can write the rules of my strategy on the back of a napkin, but the ability to apply the process and follow the rules takes practice. This, like anything else. If you want to be good at playing the piano, you practice. If you want to be good at mountain biking, you practice. If you want to be good at trading, you have to practice. So one of the things that I created a few years ago is a simulator where you can practice. What I tell all of my students is once you've decided on a strategy, use the simulator at tradescores.com. It's free to use to practice buying and selling stocks. It will track your reward for risk and your overall profitability. Once you can prove that you are effective in the simulator, it's very similar to trading on a real brokerage platform. Once you can prove your success in the simulator, then you're ready to start trading. My number one goal for myself and all my students is capital preservation. If you blow up your account, if you lose all your money, you can't trade anymore. Number one goal, capital preservation. How can you preserve capital? By managing risk effectively and by practicing where you don't suffer a loss. So the simulator, it's just simulated trading. You're not using real money. Once you are good in the simulator, all right, now you're ready to start using some money, but at a low risk level, something that's not going to hurt you. If you have a $20,000 account and you're risking $100 a trade, you could have 10 losses in a row. Yeah, it will hurt, but it's 5% of your portfolio. It's not going to, destroy your financial future. And so, and if you, by the way, if you have 10 losses in a row, you may want to go back to trading in the simulator. So what I teach my students is to simulate, get effective, trade with a small amount of risk, show that you're effective, increase your risk, show that you're effective. Once you're effective at a certain risk level, increase your risk again. What you do by doing this is you slowly desensitize yourself to risk so that you can overcome being human. By applying sound strategies with an effective process over and over and over again, it will get easier. It's always simple, but it gets easier through practice. So how do you learn this stuff? Stockscores trader training courses are a cost-effective, time-efficient way to learn how to trade. It took me 8 years before I was profitable. If you take my course and you apply what I teach, you can take what took me 8 years and cut that down to a few months. Because I'm giving you all the lessons I've learned the hard way, all the expensive lessons that I've learned over the last 26 years of trading, and I put it into the material that I give my students. Why would you want to take years and years and many thousands of dollars to figure it out yourself? I just developed a new strategy called the WAVE strategy, which is for my active trader students. It was just put up on the website 2 weeks ago. But I spent months and thousands of dollars in losses developing that strategy. So when I put it out on the website, I've already done all that work. And that doesn't mean that you're going to not stumble when you start learning it, because you have to practice it. And it's a strategy that does take some practice. But I've done the work for you, and I've got the benefit of having analyzed markets for 26 years, so I can figure out these strategies probably quicker and see things that maybe a person with only 6 months of experience wouldn't see. And so those are the benefits to the training processes that we have at Stockscores. We start with a foundation of knowledge. We have the rules and the strategies. We have a process, and then we have a tool for practicing. The process that you learn is step 1, read my book, entry-level basic concepts. Step 2, do the foundation, which is the theory behind my strategies. And then step 3, learn the strategies. I teach maybe close to 8 to 10 strategies. You're not going to do them all. You should focus on 1 or 2. If you want to be a day trader, focus on the active trader strategies. If you want to be a position trader, focus on the investor strategies. If you want to be a swing trader, well, there's some strategies for that in the active trader material. The Stockscores Education Center has a written lesson for each module, a video that explains the written lesson, an assignment so that you can practice what you've learned, and then a test so you can test your knowledge based on what you've learned. So what do you get with the investor training course? You get access to the foundation lessons in the Stockscores Education Center and the Stockscores investor strategies. You get access to the investor strategy market scans. So when you log into Stockscores, if you are one of my investor students, you get access to scans that non-students don't see. You get email support from me as long as you are a member of Stockscores. So if 2 years from now you have a question about one of the strategies or about how to use the market scan, whatever, you email me and I let you know the answer. I answer all those emails personally. I trade all day, which means I sit around in front of my screen a lot, and I have time to answer email through the day, and my students, I think, will attest to the fact that I'm pretty prompt at answering their questions. With the investor course, you get 6 months access to the Stockscores tools, and you can renew that access for $300 per year. Now, the active trader course gives you all of that. You get the investor stuff, you get the foundation stuff, but you also get the active trader strategies. And the other real benefit, I guess, is that you get the proprietary real-time indicators for TradeStation. So those indicators that put the pink dots and the blue dots and the yellow dots, and there's a bunch of other indicators that I haven't shown you, those things all come to you if you are my student. There is no other way to get them. You can't buy the indicators from me. The only way to get my indicators is to take the active trader course. In addition, once or twice a year, I do live training. I do these live training sessions less and less. I am doing a week of live training starting Saturday, November 28th. On Saturday, for about 3 hours, we will go through the foundation course material. I will make you learn it in 3 hours. Probably have to go back and do some practice after that. There's no procrastination. You're going to sit in front of your computer. I'm going to sit in front of mine and do a presentation just like I'm doing tonight, and you will learn the foundation material. Step 2 is we are going to apply the strategies. So if you took the investor course for 4 nights, about an hour each night, we are going to do market scans together. We are going to practice reading chart patterns because that is the one subjective element that takes practice. And so by doing it every night, we're probably going to look at 100 charts each evening, and I'm going to draw lines on them, and I'm going to show you the critical things that you will have learned in the foundation course, but there's no replacement for just doing it. And we won't have the benefit of hindsight. We'll be picking stocks without knowing what happens. So we're going to go through that process together as a group. I'm going to show you things. I'm going to give you some exercises as we go through the market scan results. And at the end of the 4 days, you're going to have done this and get a better sense of how to do it so that when you do it yourself the next week, you've got that benefit of seeing how I do it and getting that practice in. For those that take the active trader course, again, you get the foundation, you get the investor, but you also get to watch me day and swing trade live from Monday to Friday, the first 2 hours of each trading day, possibly more. One day in particular will focus on the wave strategy. I just don't want to say which day yet because it will depend on which day is shaping up the best. But I'm going to trade. I'm going to buy and sell stocks as you watch, and I'll explain why. I'll slow my process down a bit so I can explain, which means I may miss a few trades, but that's okay. It's all about learning that week. We're going to practice applying the strategy step by step, going through the process. So you take the theory, which you maybe understand but still find a bit confusing or overwhelming. By seeing me do it, it's like light bulbs go off in people's minds because they say, oh, that's what he meant when he said blah, blah, blah. All right, so when I'm walking through these processes, you're going to learn it that much better. And that's available for those who do the Active Trader course. So the special offer until Thursday, so you have 2 more days to take advantage of this offer. If you register for the Investor or Active Trader course before November 26th, so that's Thursday, you will get the live training for free. You get the foundation session on Saturday and the strategy application series for free. So if you do the investor course, you get the investor market scanning for free and the foundation. If you do the active trader course, you get the foundation, the investor, and the active trader. The active trader course is more expensive because you're getting my indicators for TradeStation, and you also get all the investor material as well. Cost. There are several options to learn the Stockscores approach. If you just want to learn the theory, you don't want to learn my strategy rules, you can take the foundation course. It's $995. You do not get the live training with this, however. If you want to be a position trader, then you want to focus on the investor course, $2,495. The active trader course, $3,495. And if you have an interest in one-on-one coaching from me, you'll start the course now, but the one-on-one coaching won't start until January, so I give you some time to work through the theory first. That's $74.95. I only take a limited number of students, so I've only got a little bit more space for this one because I don't like to have too many at once. It gets to be too much work. But basically with mentorship, typically once a week we'll meet 30 to 60 minutes and we'll go through a particular topic. I'll give you some homework. Eventually it becomes, okay, what are you having problems with? Let's focus on fixing your problem. Here's some homework to do it. Most people don't take 6 months to learn it. Most people can get through and understand things in quicker time, but if you need 6 months, that's great. I'm happy to help you. If you want, let's say you took one of my courses a year ago and you want to upgrade, if you log into Stockscores now and log in with your username and password and go to the education page, it will show you what the upgrade price is. So if you took the investor and you want to upgrade to the active trader, it's going to be $1,250. Just log in and see that. If you want to do the mentorship, it doesn't show you an upgrade price for the mentorship, but basically you pay the cost difference to upgrade. All right, so I'm going to take some questions now. While I'm reading, there's been lots of questions typed in. Once I have just had a chance to read these, I will start to answer them. But in the meantime, I'll throw this poll up and you can vote on this. And if you say that you would like some follow-up, I will send you an email tomorrow, maybe even tonight, and it'll give you some indication of what to, how to sign up for the course material. Okay. In position or swing trading, if the close has gone below the stop loss and the following day the stock opens higher, do you still get out? Not necessarily. With a particular strategy, those rules are covered. But if I get a stock that gives me an exit signal, but then the next morning shows strength, I'll give it a little bit of wiggle room and see what happens. Because sometimes, really, stocks should bounce off of support, and if they do, we want to stick with the trade. What platform do you use for the Canadian market if TradeStation cannot be used? I use the platform for my broker. So all Canadian brokers will give you a real-time charting program as long as you trade enough. Doesn't matter who you trade through, they all have some options. So just that's how I do the Canadian market. I use Stockscores plus that. You can also use a platform called Realtick. If the Canadian market is really hot, I will subscribe to Realtick. It's about $100 a month. I don't like to do it unless the Canadian market is hot. So, 3 years ago when commodity stocks were going crazy, I subscribed to Realtick because I could make lots of money in the Canadian market. Right now it's a little bit less active, so I'm more favoring the US market for short-term trading, and so I'm not using that platform, but that's an option. So Papuan, I hope I pronounced that right. You wouldn't have exited, and I assume you mean on VLTC from 813 down to 7. With that particular strategy, no, we hold until the close. How do you adjust your strategy to market conditions, or you just run your scans regardless and trade whatever stocks meet your requirements? Well, what I tend to do is I will focus what strategy I use based on market conditions. So up until this week, day trading has been pretty quiet. There hasn't been a lot of alpha stocks. This week there's been quite a few, but since the summer until now, there hasn't been a lot of alpha stocks. So I have a different strategy for that type of environment. It's called the wave strategy, and that's what I've been doing mostly. Well, now this week there's probably been 5, 6, 7 real strong movers. VLTC was a great one today. KBIO, you've probably all heard about this one. It's been just such a crazy stock. So alpha's coming back. So now you can do the intraday pullbacks and the superheroes because that's starting to generate picks again. So you just adjust what strategy you apply based on market conditions. What does your price test 1 to 3 headings mean? Price test is one of the indicators for TradeStation. You can program it to calculate abnormality for any test that you send it. So in different strategies, I'll say use this as the formula, and we just type that in. So if you're an active trader student and you don't know what that is, there are some videos that explain it, or you can fire me an email and I'll answer your questions. Will you show us how to use the stock scores for swing strategy? Not tonight, that's something I teach in the course material, but if you take the active trader course, then that's one of the things we'll cover in the material. Have I applied my methodologies to trading Forex, so currency trading? I have not personally. I have some students who use some of my methods for doing it. The problem with Forex is that there's maybe a dozen currency pairs that trade actively. And one of the key things I look for is abnormal behavior. Now, when you're trading individual stocks, you've got thousands and thousands of stocks to choose from, and every day there's something abnormal. With Forex, there's not always abnormal currency movement. Most of the time, currencies kind of meander along and they're pretty boring. So I think it's a hard market to trade. And to be honest, I've never met many people. I haven't met anyone that makes a lot of money in Forex. I'm sure there's some people out there that do, but Forex is a tough game because it's really dominated by the big banks and that kind of thing. And I think the little guy gets crushed. The attraction to Forex is it doesn't take a lot of capital because you can really leverage, but so many people get hurt by that leverage. So many people lose their shirt Forex trading. So I really caution you about trading Forex. To me, it's just not a good way to go, but if you know otherwise, great for you. I'm just not a big fan of it. Where on Stockscores can a person access the Stockscores simulator? It is not on Stockscores, it's on tradescores.com. So my other website, tradescores.com, has the simulator. My scanners, my radar screen things, all your proprietary indicators you have in TradeStation. If I prefer another platform and also someone competent at programming scripting, if I sign up, will you provide me enough information about those mentioned so I can rewrite, adapt it to everything? I won't give you, there's some elements of what I do in TradeStation that is proprietary. So I have certain formulas and algorithms that I just won't share. With that said, I have had students who use TC2000, for example, and who I helped develop it. So I'm not going to give you the math that I do, but I'll give you enough information that hopefully you can figure out yourself. I'm not going to give you the math because that's my proprietary element to my strategies, and it's just too valuable for me to tell that. So like I said, TradeStation I think is well worth the price, but if you want to use another platform, I will help you somewhat, but I won't go into the exact formula that I use. You'll have to figure out a way to do that yourself. Someone's asking about the DisNat, being a DisNat client and membership. We no longer have those offers from DisNat. So if you are a DisNat client, you actually won't have your free access to Stockscores after the end of December. So all of that's changing at the end of December. So unfortunately, you're going to be losing that benefit to having a DisNat account. We will have some links up and some announcements on that in the next week or two, where you will be able to maintain your Stockscores access as a DisNat client. I will have some information on that. We're just putting all that together. So that will be announced in the next few days. What is a hard stop and when do you use it? A hard stop is a mechanical order that if the market hits a stop loss price, it just automatically executes a sell order or a cover. I use that for some strategies. Other strategies, I don't use them. But for example, on my wave strategy, I use a hard stop because it's a strategy that I often have many positions open. I just can't monitor them all effectively unless I'm using hard stops. So that's hopefully answers the question. We don't use it with most strategies though. For most strategies, stocks aren't liquid enough to use hard stops, and so I really caution people about using stops on less liquid stocks. But for example, my wave strategy is trading the most actively traded stocks in the world, and so it's definitely possible to use hard stops there. Can U.S. residents trade Canadian stocks? Yes, you can. Most U.S. brokers don't give you access to the Canadian market. Two that I think probably do would be Interactive Brokers and TD Ameritrade, because TD Ameritrade is owned by a Canadian bank, so I think they offer access to the Canadian markets. So it's become tougher and tougher for Americans to trade the Canadian market, but it's still possible. You just have to do a little digging around into how. I would take a look at Interactive Brokers and TD Ameritrade as possible places to do that. I would say that the Canadian market, when it's hot, is one of the easiest places to make money, but when it's not hot, it's just boring. And right now, the Canadian market is not hot because Canadian market is heavily focused on commodity stocks, and so if you probably are aware, commodities are not doing all that well. So that's how that works. Do you find ADR and hedge ETF patterns as reliable as stock patterns? I would say so. The only difference there is volume is less of a factor because ETFs are a basket of stocks. ADRs are a bit tricky because they trade in a foreign market after hours. So you'll often see a lot of gaps on the chart of an ADR. And ADR stands for American Depository Receipt. Basically, if like a company like Vodafone, which is a European cell phone company, they'll trade on a European exchange, but they also trade on the New York Stock Exchange, I think anyway. And so it'll be trading in Europe and then it'll open in New York. And so what happens is there's price gaps on those charts. So you have to trade them a little bit differently because of that. With ETFs, you can still use patterns, but less emphasis on volume. The active trading course is for swing trading and day trading. Yes, it is. How can I take in the 2-hour morning live trading next week? That is available to anyone who registers for the Active Trader course. So if you sign up for the Active Trader course, then you can participate in the 2-hour live trading sessions Monday to Friday, starting, I guess it's next week, Monday to Friday. So I see that that's all the questions. If I missed a question, oh, I just got another one coming in. Yeah, Monica, you can only do the active trading sessions if you have taken the Active Trader course. So if you took the investor course, then you can upgrade to the Active Trader course and you're going to get access to those live trading sessions. You don't have to pay the repeat fee, but you do have to pay the upgrade fee. So if anyone has questions about how the upgrades work and what you get access to, just send me an email. It takes me half a second to answer you and clarify it, and I can look you up specifically. So it's probably the best way to do it. Philip has asked me if there's a time limit for receiving the indicators on TradeStation. No, there's not. I've had students that took my Active Trader course 2 years ago that never got around to using TradeStation until now. They were using some other platform, and I'm happy to give them to you whenever. I've got a record of who took what course, so if you've taken the Active Trader course, you're always going to have access to that material down the road. And I do update it. Like I actually, add new indicators, refine my indicators, and when I do, I send out an email to all my students with the new code. So I think it was probably about, I don't know, maybe a month ago, I sent out the new batch of indicators to all my Active Trader students just to give them the freshest stuff. All right, so I think that is all the time we have. You can see my email address on screen now, tylerb@stockscores.com. If you would like to register for the class, and again, you have until Thursday to do this, and I recommend you do it sooner than later because it gives you more time to go through the foundation material before the actual class on Saturday. It'll make it easier for you. But if you want to do that, just go to go to the home page. Click on Learn More right here. And Here's an information page all about the courses. There's the special offer expiring November 26th, and the links to sign up are right here. It says sign up now, and you'll see it shows for me purchase because I've already got those. But if you haven't purchased the course, it'll show you the price to take the course. If you want to upgrade, it'll show you the upgrade fee. So we know what level you're at as long as you've signed in. The other place you can go is just go to the education area, and it will show you whether you've purchased the level and what the upgrade fee is, or if you've never purchased anything, it'll show you the pricing. Just know that if you do it before Thursday, you will get that live training on Thursday. All right, so I think that's all the questions. I want to thank you all for joining me. It's been a couple of weeks of good webinars. I did record this, so I will be uploading the video to YouTube and sending out a link to you as soon as that's been done. And you can watch this webinar again if you like. Have a great night, everyone, and trade well.